Hello everyone, my name is Oliver from Lux Trading, and today we're gonna be discussing if the top prop trading firms are starting to fail. Prop firms are popping up each week, promising a huge amount of capital. Although this offers plenty of opportunity for profitable traders, the firms present also a huge level of risk to these traders. You may have noticed that prop firm withdrawals and their numbers are getting larger and larger every day. Is that a good thing? Well, in this video, I'll explain to you why it's not. So today we're gonna break down the numbers that prop firms show with their withdrawals, and we're gonna go through some of the red flags you should be aware when you look for a funded trading account. So let's get right into it. Since 2021, there's been a surge of companies with shiny new logos offering millions of dollars in trading capital to new traders. It is so simple. If you make a certain amount of percent without losing a certain amount of percent, you get a trading account. In some cases, you don't even need to prove that you can trade. You can have the capital regardless. And now that the prop firm market is starting to mature a bit, we have seen prop firms start to focus on their more long-term marketing strategies. And we've seen a clear trend: withdrawal proofs. The majority of online trading firms are now posting withdrawals from traders each week, with some companies even having a public leaderboard so you're able to watch the traders making money. In principle, I like the idea, but it's now became a race of prop firms to who can show the most ridiculously large number of withdrawal every week. And we've seen withdrawals so high that it's not wild to question if they're actually real. Circling back to just last year, seeing a $20,000 withdrawal from a prop trader would be absolutely great, inspiring for traders and actually realistic. Now, for an example, if a trader has $1 million of trading capital and they make a 2% monthly return, which is great, they would have achieved those 20,000. No problems here. Fast forwarding to this year, we are seeing withdrawals of 150,000, $500,000, and I have even spotted a prop firm which claimed that their trader withdrew $1.2 million in a single month. These huge withdrawals pose a few concerns for the trading industry. They raise a bunch of red flags, so let's go over them one by one. Number one, lack of risk management. If we are working with the assumptions that these withdrawals are genuine, which in this case we will, there would need to be a considerable lack of risk management, both from the trader and the prop firm. To be trading an account of a few $100,000 and net over $1 million in profit, you would need to be leveraged to the eyeballs and not care about losing. If, for example, you're trading an account of $400,000, you would need to make a 300% profit in 1 month. Now, we spoke earlier that 1 to 2% a month are realistic targets. This is more than 100 times bigger. This type of behavior is incredibly dangerous and should not be done by a funded or any other trader. Number two, it's purely marketing tactics. Whether these withdrawals are legitimate or just to entice new traders to join, they're clearly an effective marketing technique to bring in new traders. The issue with this predatory marketing strategy is that it may make new traders believe that these kind of profits are actually possible. Well, they're not. These are not realistic numbers. And on top of that, you will never see a regulated broker share the amounts of profit that their clients are making, as this would definitely be against their policies and maybe even some laws. Traders need to be aware of this when choosing a prop trading firm, as these unrealistic marketing materials may make you believe that you could be actually making 300% each month. The next point is cash flow concerns. If you have read our article, which we've posted on our website about the dangers of prop trading firms, you'll know that the majority of online prop trading firms don't trade with real money. Even some bigger names in the industry are well known for using demo accounts on their funded accounts, and maybe even running their operation like a pyramid scheme. They know that majority of their traders will never pass a challenge, and those that do will lose their account soon enough. Therefore, they make profits from selling challenges and they lose money on profitable traders. To that end, the profitable traders that a company has actually destroy their own cash flow. If these substantial withdrawals of millions of dollars are to be believed, we need to be questioning the cash flow of such firms. I mean, firstly, these are huge hits to their bottom line as they're operating on the basis that traders should be losing money, not making money. It's the same as if gamblers in a casino all take a huge win at the same time. It's gonna crumble. There's just not gonna be enough money to pay everybody out. The same thing can happen when a prop firm doesn't bring in enough new fees and then has these supposed huge withdrawals. It is definitely one of the things that makes me concerned whether these numbers are actually real, as nobody can really check them. It's a race to the top. If you look from afar, the industry is quickly becoming a very cutthroat. This ultimately leads to prop firms lowering their thresholds and cutting their profit margins. The downside for this, for the traders, is that we are seeing more and more prop firms going bust, like DT Forex Trader and Funding Talent, for example, just to name a few. We're seeing some leading prop firms stopping traders from taking withdrawals and manipulating slippage to force their traders to fail the challenges, something that an unregulated B-book broker would do. This will sooner rather than later hopefully end, as this must lead to regulatory pressure from the authorities, because we saw this same situation happen with B-book brokers. And hopefully prop firms will be next to get this sort of regulation. I hope that regulators won't take too kindly to the predatory marketing techniques and demo trading accounts being offered to clients. Only real prop trading firms with real money accounts will stand the test of time. So, how to stay safe when choosing a prop firm? With the risks in mind, you need to make sure of a couple of things. That your prop firm is actually trading with real money, that they're using a good broker, that their withdrawal numbers are being realistic, that they're not being blown up, and most importantly, that their interests are aligned with yours. And that's the case with prop firms that trade with real money, just like us at Lux Trading. The real money prop firms want the same thing as you, for you to make money, therefore they'll supply you with all the tools and opportunity that you might need. So, in summary, as with any scam, if it sounds too good to be true, it's because it probably is. For instance, a company offering instant money, they know the chance of you ever making a profit are very low so that they can stay profitable. So make sure you do your homework on the prop firm you're about to choose. Make sure that they're using real money accounts and that the numbers actually add up. And that's it for today's video. If you liked the video, don't forget to like, share, and subscribe. If you want to learn more about how we do things at Lux Trading, feel free to message our 24/7 live chat or send us an email at info@luxtradingfirm.com. My name's been Oliver. Thank you for watching and have a great one.